Let's welcome in now Bob Elliott, Unlimited co-founder, CEO, and CIO. Bob, always good to see you. Listen, stocks are surging, Bob. I've got the Dow popping more than 1,400 points right now. Let's just start there, Bob. Your response, your reaction to what you're seeing in the stock market.
Well, I think basically the result of the election is that we're going to receive much more accommodative fiscal policy than was previously expected, particularly once the Trump administration takes office, and that into an economy that is already pretty strong. Growth around 2 or 3%. You have unemployment that's close to multi-decade lows, and financial conditions that are already pretty easy. That's the sort of combination that can give rocket fuel to this economy. And I think while there's some concerns about the bond market, yields starting to rise on the long end, in a lot of ways, what we have is the Fed who is endorsing relatively aggressive cuts on the short end, which should probably keep that long end under constraint and not upend the apple cart in terms of the overall expansion dynamic that we see going on.
But how much is the Fed going to be constrained by fiscal policy next year from continuing to cut, Bob?
Well, I think the initial intuition is that, if we have expansionary fiscal policy into a relatively strong economy, that'll run the economy too hot and the Fed will need to be a little tighter than people had expected. I think the challenge to that is the fact that it's going to take a little while for the Fed to have any indication that the economy is too hot. I mean, the Fed has already looked at core PCE numbers that are running, above their mandate and has made it clear that they are comfortable with that picture on the expectation that inflation is going to come down. Given the lags in reporting that we're likely to see on inflation, we could easily see well into the second half of next year before the Fed starts to really get any concern about an elevated inflationary environment. So that means, the direction of travel for interest rates is pretty clear, as Chairman Powell has said, and I think they're committed to their easing cycle, regardless of what prospective fiscal policy looks like at this point.
What do you make of the attributes on gold today, Bob? I'm just curious. Came under some pressure. Is that positioning? Is that strong dollar? What do you make of it?
I think there's a combination of factors in the gold market that are driving it lower today. The most direct, of course, is the rise in U.S. dollar interest rates, combined with the rise in the dollar as a currency relative to other developed currencies. But probably the biggest thing that we're seeing is a repricing of risk premium in holding dollars. Particularly because the outcome of the election is basically known more quickly than I think a lot of people had thought about or had been worried about. And so you're getting basically a pricing out of that risk premium in the gold market. The broader story of relatively easy fiscal and monetary policy in the context of a strong economy generally should favor gold over time. It's just this short-term risk repricing that we're seeing driving the market today.
Bob, going into Election Day, most, not all, most of the folks we were talking to were saying who is president doesn't really matter when it comes to market returns, right? If you just look historically, stocks have gone up under Republican administrations, under Democratic administrations. Then we get to Election Day, the Republican wins, and stocks go up. I mean, is it just that am I being too reductive there? Or, is there any kind of takeaway from that?
Well, I think part of the story of why often you don't see the president themselves being a big driver of asset returns is because they are typically constrained to some degree from pursuing their policies because of Congress being controlled by say the other party, and that split government usually limits the impact of
Bob,
the
if I
executive.
I just want to interrupt you there because we don't know yet if we have a split government, right? We don't know the outcome of all the House races. If we find out in the coming days, what would happen in either scenario? In other words, if it turns out to have been a Republican sweep, what will stocks do? If it turns out that the Dems have held on to the House, then what happens in that scenario?
Yeah, I think if you look at a lot of the traded markets, the expectation in the market is that we have a Republican sweep, and now it's just about counting the votes to get there. And so probably, and that seems most likely, but in the event that that doesn't pan out, that would probably temper some of the moves that we're seeing today.
Bob, great to see you. Thanks a lot for joining us.